Okay, guys, I want to go ahead and get us started. And our goal for today is to, and we'll definitely get through Chapter 2. I want to spend a little bit of time looking at Chapter 3. And hopefully we'll get a good chunk of Chapter 4A out of the way. And that if we do that, we'll be pretty much close to being caught up with the other section to go through the material, because we've gone through all the way chapter 4 in that 4A, the first part of chapter 4 in that class. And I'll talk more of the way we're going to split up the material from chapter 4 when we get to that. Okay, so let's just go ahead and get into chapter 2. And you may have seen some of this. Actually, this part wasn't on the recording that I had posted in iLearn for chapter 2, so it kind of had stopped where we left last time, that recording. So I'll be posting this up on iLearn as well. But let's just go ahead and talk about the different funds, okay? And what we're going to just understand quickly here is get a vague notion at this point of the type of activity that are in these funds. Abba-dabba, you know where those are made, right? Hayward, California. Those are made in Hayward. Okay. So, anyways, that's the name of the company, Abba-dabba. They make Rocky Road and different candies. Anyway, so what's happening? We are going to go through and quickly get a notion as to what the different funds do. We'll get into more of that detail as we start to talk about the actual activities. We get more into chapters 4, 5, 6, 7, and 8. Okay, and we go through the different funds. But let's just go ahead and understand that we have the general fund. General fund accounts for transactions that are not specific, that are general in nature. Anything that isn't accounted for in one of the other funds ends up being accounted for in the general fund. Okay, thus the term what? General. And remember, we had the discussion before where we had that capital project that we were trying to work on, and we came to the conclusion that we wouldn't be able to use some of the money for our environmental impact study, and we were like $30,000 that we needed, and I said the general fund would probably send that money over. Okay, so the general fund does that sort of stuff. It covers expenses not paid for by the other funds. And fire and police are a classic example of things that get paid for out of the general fund. Okay, the special revenue fund is going to be taking revenue that the government is getting and is going to make sure that those are used for a specific intended purpose. And they have this road here. And road improvement is the classic example of something where we would use funds from the general fund to handle our road improvement, for example. Okay, and I gave you an example of that earlier on. Okay, taking a look at the debt service fund. Debt service fund's job is to pay the principal and interest of general obligation debt. Okay, so you want to put cell phones away at this time. Okay, this is not time to be texting and monitoring two things at once. So what happens? We have the debt service fund, and with the debt service fund, it pays the principal and interest of general obligation debt of the government. So we have the debt service fund. Capital project fund, you can see from the graphic here, this is where we'll keep track of the money that is being accumulated and then spent for the construction of some sort of capital asset, whatever that is. Okay. Permanent fund, remember I gave the example, I think, in here of the permanent fund. Remember Miss Hayward wanted a park for her great-grandfather or whatever it was, and so we maintained the principal forever, but we could use the interest, etc., to run the park, right? Okay. Sir, do you want to move, kind of perch, have some folks give you a little room for some help to get on the table? Just give him give him 4 inches of table. He'll be thankful, right? Okay. Then what? Then we come over and we take a look at our next category of funds, our proprietary funds. There are 2 fund types there. And so we have our internal service fund and our enterprise fund. And if you take a look at our proprietary funds, we're using full accrual accounting, and so you know that we're going to have our capital assets, we're going to have our long-term debt, right, under full accrual accounting, okay? And so the format of the statements for our proprietary funds follow the approach that you're seeing here, which is going to be what? Going to be our assets plus our assets, I should say, minus our what? Minus our liabilities, and it's all assets, whether current or non-current, and that's going to equal what? Net position. So it's sort of like saying that assets minus liabilities equal what? Equal our stockholders' equity. And of course, stockholders' equity in the government is really just what? It's called net position, but it's really like our retained earnings, right? Because we don't have stock being issued in the government, right? Remember all that? Okay. And then if we're dealing with our governmental funds, these are our governmental funds up here. Governmental funds are going to take a little bit of a different approach for their balance sheet. It's current assets equal what? Current liabilities plus, and the fund balance now is analogous to our net position for our proprietary funds. So the fund balance is like retained earnings, right? Okay, so we talked about that last time, and the only point that I want you to remember here is that if you're the proprietary fund, you are encouraged to use this approach. And encouraged means that most governments would go ahead and present their proprietary fund statement of net position. Encouraged, that says encouraged to use this approach. Most of them are encouraged to use this approach. They're all encouraged, and most of them will use this approach. And so that's the statement of net position for our proprietary funds. Okay, the governmental funds, is this encouraged or required? This is required, right? That they use this approach for the governmental funds. Okay, good. So we have our statements, and you can see here that we have both current assets, current and what? And non-current assets, right? This is our proprietary funds. We have our enterprise fund. This one had two, water and parking and water and sewer and parking facility, and then we have our internal service fund. This is also a proprietary fund, right? Right? Okay. Come over. We have our liabilities, current and non-current, and the difference is called what? Called net position. Okay. Okay, good. We also have our statement of revenues, expenditures, and expenses and changes in fund net position, and this is like our income statement, isn't it? Like IS. And if you look at this structure, guys, operating revenue, operating expenses, and then what? Non-operating revenues and expenses, just like you would in commercial, right? Okay. Now, we're not going to get into it until much later, but just remember, when we get into Chapter 7, we'll talk more about this, okay? But just remember that we do have to prepare a statement of cash flows, don't we, for our proprietary funds? Okay, we don't have to for any other fund. They're the only ones that prepare the statement of cash flows. And it is similar to commercial, but there are some important differences that we'll study in Chapter 7. For example, you cannot use the indirect method. You must use the direct method, right? Okay, when you prepare this. Okay, good. Proprietary funds, internal service fund, and basically an internal service fund is set up to account for services that are being provided to the other funds. And you see this mechanic here, classic example, fire and police, or emergency type vehicles, probably going to be serviced by an internal service fund, right? Because we know what specifications we want to maintain those. When the internal service fund provides that service, say paid for by the general fund, they're just trying to cover cost, aren't they? They're not trying to make a large profit. Did I tell you the engagement that I was on where we looked at internal service funds? No? I was on an engagement where in those days, When I first started with GAO, and like for maybe the first 15 years, 20 years or so, we used to sometimes be able to self-initiate work, which was actually kind of fun because we would study different things and say, okay, here's a way that we can help the government run more efficiently. We could just go ahead and start that work. Towards the end of my career there, we got into more request work where Congress would specifically request what they wanted us to do. I think they were kind of saying, hey, who's in charge here, GAO? We're Congress. You work for us. You don't go off and do. We'll tell you what we want you to do. And that was okay, too, because sometimes those requests were pretty interesting as long as they didn't seem to have a political spin to them. Towards the end of the years I worked there, it was all legislatively mandated work in which the law said we had to look at specific things. And that stuff started to get a little tedious, and that they got to a point where they were having 60-day reporting cycles. So every 60 days we'd have to report again what happened. It was sort of like saying, well, the paint has dried a little bit more this time, right? And so that got a little tedious. But anyway, going back to when we self-initiated work, what we did was we looked at internal service funds of different governments. We took a sample of those, and we took a look to see if the internal service fund was building up a large net position, a large retained earnings, because if they were accumulating profits, weren't they? If their retained earnings was growing. And profit is not a chargeable expense to federal programs. So we were looking at that and saying, well, if the federal program is funding a particular state or local program, and then there's an internal service fund that's charging that program for work, and then they're building up a large retained earnings, those costs that are over and above enough to cover the cost are what? Profits that are not allowable expense. So we went and we looked at that, and we actually recovered funds that had been overcharged to the government against these different programs that had been, because the internal service funds were the indicator that was showing that they were building up a big net position. Okay, so they're not supposed to be getting this huge profit, right? They're supposed to be, what? Just covering their costs. So we should see a small, maybe even a small negative net position, but there should not be a huge positive net position in these funds. Okay, now we come over and we take a look at the enterprise fund. Enterprise fund is providing services, isn't it? So we looked at water and sewer. Remember I gave the example of, hey, you're washing your hair and they cut off the water, right, on you because what? You didn't pay the bill. So we can't operate this fund unless we get the, charge for service here. Okay. Okay, good. And again, they have the statement of net position. We have the statement of revenues, expenses, and changes in fund net position, and the statement of cash flows, and we just took a quick look at those. Okay, good. Then we have our proprietary funds. There are 4 of those, right? And this is our mnemonic PAPI, right? So we have the pension fund, agency fund, private purpose trust fund, and the investment trust fund, right? Okay. So when we deal with our fiduciary funds, when we look at our statement of fiduciary net position, that's going to be capital assets, full accrual accounting. Additions are what we call our revenues. Okay, our revenues are called additions. Our expenses are called what? Called deductions. Okay, so we have additions and deductions. Then what? Then we have our format, and we've seen this slide before. For our proprietary funds, we are required to use this format. So it was what? It was encouraged for the proprietary funds, that format. It was encouraged for the government-wide. The governmental funds had to use the balance sheet approach that we see here. It is required that the fiduciary funds show their financial statements as that difference equation. All assets minus all liabilities equal our net position. So we're required to show that like that. Okay, good. So let's take a look at this question. The format of presentation for the statement of financial position for the fiduciary funds adheres to which of the following? Assets and deferred outflows of resources minus liabilities and deferred inflows of resources equals net position. Is that what we saw on that last slide? They have to use that approach. Okay. Okay, good. Come over and let's look at the financial statements. And we have our assets, both current and non-current. Notice, guys, that most of our assets are in the form of investments in a pension fund. This is an example of the pension fund now. And they carry those at fair value, don't they? Makes sense for a pension fund to carry their assets at fair value. We want to see, is our investment losing money, is our pension going broke, whatever, right? Okay. Then what? Then you come over and they talk about the liabilities, and then difference between assets and liabilities are considered what? Net position. You look at the statement of changes in fiduciary net position. Our additions are like revenues. And as I mentioned, I think a while back when we were talking about the pensions, both the employer and the employees are making contributions to the funds these days. We have to get some investment earnings, don't we? We just don't put the money, in a mattress and hope that there'll be the funds available to pay someone's pension later. Then you come over deductions, and what are the deductions like? Like the expenses. Good. And obviously, if we're paying the benefits, that's a deduction, right? If we're refunding, somebody leaves the government and we need to refund them their money, that's going to be a deduction, right? And of course, we have to pay administrative expenses, and I kind of make fun of that sometimes because it's, how much do we have to pay somebody to lose all the money in the pension, right? But we have to pay those people to make those kind of decisions, right? And that would be an administrative expense. Okay? Okay, good. Agency fund. Agency fund is a fund that's going to hold resources and then transfer them to another fund at some point in time, and we'll talk about that more in Chapter 8. Investment trust fund. If I am a county, I may set up an investment trust fund in which I'll keep track of investments for entities that are sort of in my borders, cities, whatever, that want to invest funds. And sometimes we'll do this so that we don't have to duplicate costs such as paying fees, that sort of thing, right? And so that would be the investment trust fund. We'll talk more about that. Private purpose trust fund. I always feel, I'm always kind of scared of this one. Where are their faces? Okay, so what happens? These are faceless bureaucrats, I guess, right? Okay, you never heard that. You never heard of a faceless bureaucrat? Okay, they say a faceless bureaucrat. And I saw a cartoon one time that said if the faceless bureaucrat meets the open-faced sandwich, and the food is just sliding down the person's face. Okay, I don't know. Why does anyone want an open-faced sandwich? Just save the bread, I guess? Anyway, so what happens? We sit here. Stop, John. We sit here, and the private purpose trust fund is where the government is holding money on somebody else's behalf, a private entity. For example, let's say we have a situation where a not-for-profit that is supposed to benefit police officers comes to the city and says, will you please hold this money on behalf of the police officers? Even though it's a private entity, the city may agree to do that because it's helping police officers in their city, whatever, right? And so if they're going to go ahead and do something like that, they account for that in a private purpose trust fund because it's not a public purpose. It's for the children of police officers maybe who were killed in duty or something like that, and they may hold that fund in a private purpose trust fund. Again, we'll get into the detail, the activity of all of these when we get into Chapter 8. Okay, so the key thing right now is that you simply understand that we have three categories of funds, right? Three categories of funds: our governmental funds, our proprietary funds, and our fiduciary funds. Governmental funds, we have what? Our GRAS funds, general fund, special revenue fund, debt service fund, capital project fund, permanent fund. Our proprietary funds, two of them: internal service, the S and C PAPI enterprise fund. And then when we're dealing with our investment trust fund, our fiduciary funds, we have what? Private purpose, agency, the private purpose pension, agency, private purpose, and the investment trust fund. I guess you could go either way with the P's on that, right? Okay. Okay, good. Okay, and there's the pension. Okay, and these guys are all enjoying their pension. Okay. Okay, now we talk about reconciliation. And we're going to see that we're going to have two reconciliation in this class, in which we are going to have to reconcile the government-wide financial statements to the fund financial statements. Now, we won't get into this until after, for our second midterm, so it's after Chapter 8 or so. We will dig into the reconciliation a little bit more. Okay, but let's just use a quick example of what this reconciliation is all about. We will have to provide this as part of our financial statements. So let's say I purchase some equipment, and I purchase this equipment for $1,000, and I purchase it out of the general fund. So what would be the entry in the general fund, I should say, when I purchase that equipment? $1,000 cash, I pay for it. General fund. Modified accrual accounting. Purchase equipment. Huh? Good. Debit expenditure. Beautiful. Debit expenditure, right? I'm going to debit expenditure for $1,000, let's say. And when you spend cash, what do you credit? Cash for $1,000. Okay. Okay, good. Now, that's at the general fund, at the governmental fund level, right? What happens if I'm purchasing that equipment and I'm trying to report at the government-wide level? Now what do I do? Same transaction, but now I'm at the government-wide level. What type of accounting do I use at the government-wide level? Accrual. Okay, when I purchase equipment, what journal entry do I make under accrual? Debit equipment for $1,000. Credit cash, right? For $1,000. With me so far? Same transaction being accounted for differently if I'm at the government-wide level versus what? At the fund level, right? Okay. So what we're going to see is, let's say, before we do that, let's say this government had just this one transaction. It had $1,000 cash and they spent it all on equipment. Okay, so if I prepare my balance sheet, in the governmental fund balance sheet, the general fund balance sheet, how much cash do I have? How much cash do I have? How much cash do I have? I had $1,000 cash. I spent it all on equipment. How much cash do I have? Zero. Okay. Okay. I'm telling you that I have no other current assets. And my current liabilities, I'm telling you, are zero. So how much is my fund balance? Not a trick question. My fund balance is zero, isn't it? Right? Okay, now, if I'm trying to prepare my statement of net position, and I'm preparing that now using full accrual accounting, I had $1,000 cash. I spent it all on equipment, so how much cash do I have? Huh? Zero. But now I have equipment. Don't I have $1,000? Oops. Usually, John, we write the name of the account to the left and we write the number to the right. Isn't that how we usually do it? So I have equipment here now of 1,000, don't I? Okay. Okay, and so I have no liabilities. I'm just telling you the liabilities are zero. So my net position now is how much? Not a trick question. 1,000, because I have that equipment, right? And my liabilities are zero. My assets minus my liabilities give me a net position of $1,000, doesn't it? Okay. Now what happens? Somebody sits there and they look at these two levels of financial statements. I'm just going to do it this way. And they're not seeing the connection between the what? Between the equity that's reported at the fund level and the equity that's reported at the government-wide level. That's not matching, is it? There's a problem there? Okay, no, it's a problem, but the GASB has said the way you'll show the connection between these is by performing a reconciliation. Okay, what the reconciliation does is it'll start with fund balance. How much is my fund balance? Fund balance is 0. It'll start with fund balance. This is the reconciliation. It says recon. It'll start with fund balance, and it will reconcile to net position. How much is my net position? 1,000. And I'm going to sort of talk like a Neanderthal man here, and I'm going to just say equipment. They would probably be a little more eloquent in their discussion and say, should I do it with an English accent so they're just being a little bit more eloquent? They'll say, you know, assets are reported at the government-wide level, but not at the fund level. And they'll just sit there and they'll add it back. But at the end of the day, they're just adding back the equipment, aren't they? Okay, so they go ahead and they add back that 1,000. Does this thing reconcile? When they add back the equipment? Reconciles, doesn't it? Okay, that's what these reconciliations do. Okay, now let's say that we're sitting here and we have this equipment of 1,000 here, and let's say now I change the fact pattern up a little bit and I tell you that they have a long-term debt of 500. Let me just write that in different colors so we can sort of see it there. I tell you now that we have a long-term debt of 500. Do we report long-term debt on the government-wide statement of net position? Do we report long-term debt on the government-wide statement of net position? Government-wide statement of net position is a full accrual statement, so we have current and non-current items on there, right? Just like we had the non-current asset equipment, we're going to have the non-current liability, say note payable or bond payable, whatever, right? Okay, and so what happens? We sit here, and our net position now would be what? Okay, guys, net position is the difference between my assets and liabilities, just like the difference between your assets and your liabilities is your stockholders' equity, right? Right? So the net position is how much? $500 here now, right? Okay, and so what happens? Since we now are showing this $500 as our net position, what would we do? Again, I'm going to write it like a Neanderthal man, but they would just say long, you know, they'd say more, but I'm going to just say long-term debt. And I put in the long-term debt, and when I subtract out the long-term debt, does this thing reconcile? Does this thing reconcile? Okay, so that's all the reconciliation does, is it basically shows my fund balance, whatever it is, and it shows how I get from my fund balance to my net position, and it simply makes adjustments going from what? Going from modified accrual to accrual accounting, doesn't it? By adding the equipment, subtracting the debt, etc. And we'll talk, and the reason we don't talk about this in any more detail here is you have to first understand all the differences for the whole discussion of the reconciliation to be fully meaningful to you, so I can put it on the second midterm. Okay? Question? Okay, that's the way the reconciliation works. Okay, and we'll look at those a little bit more in some of the later classes. Okay, all right, so when we're at the government-wide level, we know that we use what type of accounting? Full accrual accounting, economic resources measurement focus. Good. When we are sitting there and there's the statement, right, using full accrual accounting for our statement of net position. We were just looking at this a couple minutes ago. I just want to show you here that if we're dealing with our business type activities, we really don't have to go through much trouble. We don't prepare reconciliation for our business type activities because you can see this $1,835,000, which is in our business type activities, our enterprise funds, isn't it? And so what happens? If you sit there and you look at my enterprise funds, which is showing on my proprietary fund statement, notice my my internal service funds are over here. But for my enterprise funds, if I add my water and sewer and my parking facility together, and I come to this total column, and I come all the way down to my net position, is that the same number? 1,835,000? That's the same number, isn't it? And that works that way because what? Both the government-wide statements and the what? The proprietary fund statements are both using full accrual accounting, right? So when we consolidate our enterprise funds into that business type activity, we don't need a reconciliation to connect up their equity positions, right? We only perform the reconciliation to do what? To connect up the government-wide governmental activities to the fund financial statements, because the difference in accounting between the government-wide level and the fund level for our governmental activities versus our governmental funds, right? Okay. Okay. Anyway, we'll get more into the reconciliation a little bit later. Let's talk about major funds. Okay. And I think the other day we had the question, well, look, if there's how many funds? If there's 11 different funds and we added up the number of financial statements for each fund, would there be 24 different financial statements? And remember I said, well, no, they report them in columns, right? And then we were talking after class and you were going to count them to see if there were enough columns that came into the 11. I said, don't count them, right? And the reason I said that is because the number of funds that we actually report on the face of the financial statements is not 11 funds that have to, each one be one column for the debt service, one for the capital project fund. It doesn't work that way. These are fund types, and the government can have hundreds of funds that fall under those 11 different categories, right? Now, if we put all the hundreds of funds that a government might have on the face of the financial statement, they would lose understandability, wouldn't they? You'd be sitting here going, I can't read this thing because of all this information, right? So what GASB says is the funds that you have to report on the face of the financial statement are those that are the major funds. And these major funds, the big funds, are the ones you report on the face. The ones that are non-major, you'll roll all them up and you report them in what? One column. Okay? And so what happens is when we talk about these 11 funds, it's fund types. And then all of these different hundreds of funds that the government may have will fall under one of those fund types, right? Now, there's only one general fund, but the rest of the funds, they could have hundreds of special revenue funds. They could have they usually have one debt service fund. They could have hundreds of capital project funds, okay? And so what happens is we're just going to pick out what? The big major funds, and those are the ones that we report on the face. And so how do we know if a fund is a major fund? Well, the general fund, there's only one, and it is always a major fund. So if you're the general fund, you don't have to ask yourself a question anymore, are you meeting the criteria for a major fund? You're automatic, right? So will the general fund always be reported on the face of the financial statements? Yes, it will, because it's automatically a major fund, right? Okay, now what happens? If for the other funds to be considered major and be reported on the face of the financial statements, they have to meet two tests, a 10% test and a 5% test. And when we apply that test, we apply the test to their assets, their liabilities, their revenues, their expenditures, but you can put down here not fund balance. FB is fund balance. You do not apply the 10% test, the 5% test to fund balance. But it's two tests that you apply to every single line item on the financial statements except what? Except fund balance. So it's assets, liabilities, revenues, expenses, right? And the fund just needs to meet the 10% and 5% test for any one of those line items. And if they do, they are considered a major fund, and they have to be reported where? On the face of the financial statements. Okay? Have you guys studied segment reporting at all? Segment reporting? No? Okay. In the SEC requires that public companies report information about their segments, okay? And the way a company would know if they have to report information about their segments is if they meet a 10% size test, and the 10% size test is for revenue. It's for revenues, it's for assets, and it's for profit or loss. It's a very similar process, but for the government, we do what? We go through and we do every single one of the line items except what? Except fund balance. We don't do it for fund balance, okay? So just look at this example. It's a little hard to read here, but I took this out of the textbook. See if I can make that a little bigger. Okay, and let's just take a look at this example here. And we have to meet two tests, a 5% test and a 10% test, right? Now, something that makes this example that I just kind of lifted right out of the book a little bit confusing is you see this this 10% threshold that we've come up with here? See this 10% threshold that we've come up with here? Okay, this 10% threshold was they took all of and they do it for assets, liabilities, revenues, expenses, expenditures. They took all of these, say, assets. Let's just start with assets. Okay, and they took all of the assets of all of the governmental funds, and they multiplied that number by 10% to come up with that 10% threshold. And what makes this a little confusing is they're not showing you all the governmental funds that they use to come up with this 10% number, right? So that gets a little confusing because you want to just add up those funds and multiply that by 10% to come with this number, and you won't be able to do that. For example, they're not showing me the general fund, and I know the general fund's a governmental fund, isn't it? So the general fund would have been included in the total for the assets, and then that total would have been multiplied by 10%. It would have given me this 4,492,627 as my what? As my 10% threshold, right? Then we also have we remember 5% threshold. For the 5% threshold, what we do is, again, we take all of our governmental funds, just like we did for the 10% test, but we also take all of our enterprise funds, add those in, multiply that number by 5% to come up with our 5% threshold, okay? And again, now it's really confusing because you can't even see any enterprise funds here. But that's how they would have gotten these numbers here, even though they didn't show you the detail of the calculation. So we have two thresholds, a what? 10% threshold and a 5% threshold, right? And now we go through each one of these and try to see, we do it for assets, we do it for liabilities, we do it for revenues, we do it for expenditures, to see if at any point in time for any one of those line items, did they meet both tests, right? Okay, so let's just focus on this road fund. Why don't we do that? And that's the one I've highlighted in green here. And so we're going to start with assets, and let's see if it meets both of these tests. Does the road fund meet the 10% size test? The threshold is for $1 million. It's at $1 million. Doesn't meet it. We're done. It is not a major fund based on the assets, right? But we don't stop at assets. Now we have to go to liabilities to see. Does it meet the 10% test for liabilities? Yes, it does. The threshold is $86,000 and it has liabilities of $172,000, whatever, right? Does it meet the 5% test? Huh? It does not meet the 5% test, so it is not a major fund. Got to meet both of them, don't they? Right? But we don't stop there. We say, okay, let's try revenues. We go to the revenues and we say, okay, does it meet the size test for revenues? No, it does not. $4 million, it's too small, isn't it? Okay, it's got one shot left. Expenses, expenditures. Does it meet it for expenditures? 3 versus 5. No, it doesn't. So the road fund, what? Is not a major fund. Now this road fund, I'm thinking, is probably a special revenue fund. It's in our category special revenue fund. That doesn't mean that there's not other special revenue funds that do constitute a major fund, right? But for this particular one, it did not constitute a major fund, so we're not going to report on the face of the financial statement, right? Okay, let's try the debt service fund. How about that one?
For the road fund to have counted, it would have to, all of them, asset, liability, revenue, expense, all have to meet the
No, it would have to meet it for one. If you meet it for any one, watch the debt service fund, and you'll understand, okay? So take a look at the debt service fund. Does the debt service fund meet the requirement for assets? No, it doesn't, so it's not a major fund based on assets, right? Does it meet it for liabilities, the 10% test? Huh? No, it's not meeting that one either, okay. Okay, how about for revenues? It has revenues of what? 6.8, and the what threshold is under is 673, whatever. So it meets it, doesn't it? Does it meet it the 5% test? Does it meet the 5% test? Yes, it does, doesn't it? Right? Here's the threshold. Here's the number we're testing against. It meets it for both of it, doesn't it? So the debt service fund is what? Is going to be a major fund because it met the 10 and the 5% test for one of the line items, in this example, revenues, right? Does that clear up the question? So it just has to meet it for any one, doesn't it? Any one line item? Look right here. What's your name? Is that making sense? It is making sense? Oh, okay. It looked like maybe it wasn't making sense to you. So we're good on this? Okay. Now, the takeaway again, guys, is not fund balance. That's all I want you to remember. I'm not going to make you sit here and do okay, now show me which one's the major fund. You got to sit there for 20 minutes messing with the stupidity, right? For 20 minutes trying to figure out a major fund for what? Okay? So, all I want you to know is we did not use fund balance for this, right? Question? Okay, good. All right, so here we go. Now, finally, you can look at this governmental balance sheet that we've been looking at, and I can speak to you now in full truth. There's the general fund is always a major fund, and now what? I don't know, this HUD program, probably a special revenue fund. This convention development tax thing, this convention center bond, I'm thinking convention center construction. I'm thinking those are all capital project funds, right? So those categories that we talked about, the governmental fund, the special revenue fund, the debt service fund, the capital project fund, those are fund categories, aren't they? Aren't those fund categories? Fund types that then the hundreds of funds that this government had could potentially fit under. But on the face of the financial statement, we only report what? We only report the major funds. That was why I didn't want you to count them, right? Because those are only major funds there, and you won't count 11. Okay? Okay, now you come over and you take a look and see these other governmental funds. You see that column? Those are the non-majors. They didn't label them as such, but that's what they are. Those are the non-major funds. Okay, they roll them all up and they report them in one column, right, John? Okay, now you come down and you take a look, and the total of all those non-major funds is $359,000, isn't it? $359,000. Okay, and so you come over from that and you take a look, and we have this optional reporting of non-major funds. You see that? So this is something that a government could provide if it wants to. And notice down here, guys, they've called out the non-major funds, and they've told you whether they're debt service, whether they're capital project, whether they're special revenue, whatever, right? They're not the general fund, because the general fund's always a major fund, right? And there's only one general fund. And here's a poor little permanent fund sitting here all by itself. It's the only fund in its category, and it's not a major fund, right? So we add all those up. And if they're not a major fund, what does that mean? What test did they not pass? didn't pass the 10% and the 5% test. They're a non-major fund. And if a government wanted to, they could show you the detail of all those non-major funds in a supplemental reporting. I probably shouldn't call it supplemental. Yeah, I guess it is. It is supplemental, but it's not required supplemental information. It is what? Optional. But are they giving me the detail here as to what was in that column, other funds? Okay? Okay. So that's all that is. Okay, good. Just remember, guys, that when we're dealing with our capital assets, they are reported at the government-wide level, right, under the governmental activities column, under the business type activity column. And when we're down at the fund level, our governmental funds do not report capital assets. Our proprietary funds and our fiduciary funds do, right? Just reminding you of that. We've talked about that quite a bit, okay? And same thing with our long-term liabilities. Long-term liabilities are what? Are reported at the government-wide level. Of course, since we're in full accrual accounting there, we're in full accrual accounting for the proprietary fund, so we report our long-term liabilities. We're full accrual accounting for our fiduciary fund, so we report our long-term liabilities. How about our governmental funds? No long-term liabilities. No non-current items, right? Everything is going to be current there, right? Okay. Okay, good. And I thought this slide was pretty good, okay? This slide is good in that it does what? It breaks down by fund type and government-wide, whether we use full accrual accounting or not, and whether we use the economic resource measurement focus or the current financial resources measurement focus. And we know that what? Our governmental funds are the only ones that use modified accrual and current financial resources. Everybody else, full accrual and the economic resources measurement focus, right? Question? Okay. Let's talk about now that bottom box, required supplemental information other than the MD&A. Okay, now that's the bottom box, right? Remember we had what? We had our MD&A was the first thing we saw. What's the second thing we see? The basic FS, right? And the basic FS constitute, I don't know why FS has to be outside the box. I couldn't fit it in the box. But basic financial statements include the government-wide statements and the fund financial statements, right? And then you come down to that bottom box. What's down here? RSI other than the MD&A, right? So we know that MD&A is RSI. MD&A is RSI, isn't it? Okay. Okay, good. So we take a look at this and we have what? We have our required supplemental information other than the MD&A. So we're down here in this bottom box now, right? Okay, and an example of the type of stuff that appears down there is this thing called budgetary comparison schedule. Okay, and with the budgetary comparison schedule, we're going to show the original budget and we're going to compare the budgeted amounts to actuals. They tell us that computation of variance is optional, and you look at that and you're like, well, wait a minute. You're telling me it's required supplemental information. You're telling me I have to prepare a comparison between the budget and the actuals, and then you tell me that the computation of variance is optional. What the heck's going on here? And so just come over and take a look at the actual budgetary comparison schedule. Here's my budgetary comparison schedule, and we're doing it for my general fund. And I have what? I have the budget, final, original. I have the actuals, don't I? Isn't that comparing the budget to the actuals? This computation of this variance is optional. You do not have to show that variance column. You do have to show the comparison. You don't have to show the what? You don't have to show the variance calculation like that in that column. Okay? Question? Okay. So let's go ahead and let's take a look at this exercise here and see if we can figure out what GASB has told us what GASB is requiring us to report in these different categories. And I just want you to remember that the first thing we see is our MD&A, isn't it? Is the MD&A RSI? Yes, it is. Required supplemental information other than the MD&A, so that means the MD&A is RSI, right? That's the first thing we see. The second thing we see is what? The basic FS. And the third thing we see is required supplemental information other than the MD&A, right? Okay, so let's just go ahead and see if we can figure out which categories these fall into. And notice that corresponds to the 1, 2, 3 here. Oops, 2 is that one. That corresponds to the 1, 2, 3. Let me get rid of that line there because that's confusing. Okay, so we got 1, 2, and then we've got what? 3, right? Okay, so let's take a look. General fund, statement of revenues, expenditures, and change in fund balance. That is going to be what? Basic financial statements, right? Okay, good. Disclosure of significant financial terms for the water and sewer bonds. Huh? Disclosure is talking footnotes, isn't it? And the footnote is part of the basic financial statements, right? Right? That one's a little tricky. A description of the city's application of the modified accrual basis. This is a summary of significant accounting policies. That's a footnote, isn't it? Isn't summary of significant accounting policies like the first or second footnote you see in a set of financial statements? Okay. All right, good. How about budget versus actual? 3, we just looked at that, right? That was an example of what was down there, required supplemental information. Narrative analysis of variations from the budget. Now, Yeah, very good. That's 1. I was going to say before you say 3 because I just showed you an analysis, but when it says narrative, that's what the MD&A does, right? It's describing things. Okay. Capital assets associated with governmental activities goes where? Into the basic financial statements, right? Aren't the capital assets associated with governmental activities reported at the government-wide level? Right? And then what? Statement of cash flows for our enterprise fund. That is obviously what? Part of the basic financial statements. Okay, good. Finally, we're done with Chapter 2, right? It took us a while to get there, but we are done with it. Okay. So, what I'm going to call at this time is that we take a quick break. Let's make it 10 minutes, okay? And we'll come back and we'll start in on Chapter 3, okay? All right, so let's just take a quick break right now. We'll come back, start up Chapter 3.